Welcome to the Swing Trading with Cycles channel. We're going to do a quick update on natural gas today. Definitely take a look at the pinned comment. As always, you can find past videos there and also background on cycles, other price action concepts. If you're new to the channel, welcome. We use price action here to understand the trend. We're not trying to predict anything. We just want to understand what's happening right now, which is to say, is it trending up? Is it trending down? Or is it going sideways? And right now, this is your daily chart of natural gas. I should say cycles help us to categorize, like just basically quantify that trend a little bit. So we had a 7-day rally. That's what the 7 is, right? So we bottomed, we had this really long cycle at 52 days. And to be specific, that's 5 days of going up and 47 days of going down. Right? So not pleasant. And obviously you had this little period where we really just kind of consolidated for a bit, kind of stopped going down and just churned sideways, and then a final dump. And now we got above that. And notice this low that is holding right here a little bit, kind of, sort of, is right around the level of this consolidation. That's not a coincidence, I don't think. And so it's going to be really interesting to see which side of it breaks. Again, we're not predicting the future here. We can't say we know where price is going. What we do know is that the high for this cycle came on day 7, just as a high, and the high on the cycle before came on day 5, for instance. The one before that was day 22. We had already been in a downtrend, actually. And so at this point, it's every day that passes, as we say, it becomes more likely that this is the high for this daily cycle, and we're declining into the daily cycle low right now. And the important thing about that is that those tend to be, I mean, this last one was really long at 52 days. This one was 30 days. This was 33. This was 21. This is 24. I think it's only day 15 right now, right? So that's 8, 9, 10, 11. Yeah. So today was day 15. And I should say it's March 15th. It's a Wednesday. So we're about to, we will open the Thursday candle at some point. Market has closed. So we're going to be opening day 16, let's say. So it's not super early in the daily cycle, but it's also not late, which is to say we could easily, if this is our daily cycle high at day 7, we could easily see this thing continue to drop for another 5, maybe even 10 days, complete like a 20, 25-day cycle. There's no reason that it can't go up from here, obviously, but that's a scenario that we want to be aware of, that we could be ready for a lot more downside. And most importantly, if we look at the higher time frames, they're screaming to us a big risk. Again, this is the natural gas futures we're looking at. This idea of a potential bearish outside monthly candle. That is when price makes a higher high and then goes on to make a lower low as well and then closes red. That's a bearish outside candle. The most recent monthly bearish outside candle was this one here. So you can just see it. That is a candle that made a high at 966 and then went on to make a low at 5.35. And this candle had made a high at 9.447. So got about 20 cents higher, and then it went red, and that was your first big warning sign. Someone said on Twitter, this notion, I just switched it to log form. It doesn't matter. Log or linear doesn't change a bearish outside candle. It makes a higher high and also makes a lower low, closes red. It is important to know how the monthly candle looks at all times. Obviously, if you're early in the month, a lot can change. So we're now at, again, this is March 15th. So we're about halfway through the month, and we have this situation here where we're like right on the edge, right? Like we are right on the edge, and it's going to be interesting to see. Again, if this thing opens up, you have a very clear target down to this low here at 1.967, and obviously there's equivalent levels on UNG and BOIL. And obviously, if this is actually turning out to be a consolidation pattern, then what you will see for the April candle is something like this. So either way, this will resolve in a nice trending move. And whether it's to the downside or the upside, the targets will be really clear. And that daily cycle is going to give you the best clue of that. Like, think about that. If day 7 was the daily cycle high, then it means it's more likely that this monthly candle is going to become a bearish outside candle, is going to make a new low below this, or at the very least get close to that. because we're going to keep declining in the daily cycle, which is going to make this monthly candle go more red and obviously move lower. And the other hint here is if you look at a 2-week candle. So we'll go to the weekly chart. This is the weekly candle as it stands. Now, again, there's a chance here. It's trying to hold this as a higher low, as we mentioned in the previous video, as a higher, like basically this is your higher high, this becomes your higher low, and then tries to make a move up. Obviously having some trouble here with this upper wick on this weekly candle. But if you look at the 2-week candle, that's going to give you more of a hint as to what's likely to happen on the monthly. And you can see it is right now on a razor's edge. But that's helpful to know about, right? So like below the low of this candle here, which was the last 2-week candle that just closed last week, we're now if we get below that low, that massively increases the odds that we're going to break below this low, which would be the equivalent of us making that bearish outside candle. So that is the pattern to be really aware of. And again, watching those lower time frames to understand how likely it is for that to unfold. Right now, the odds favor that it does unfold just because of the length of this. Yet at the same time, like, again, that's why this is tricky. Like as Carter Braxton Worth would say, it's like a pair of twos in terms of it's not like a clear, oh, this is obviously in a downtrend. And let's zoom into the lower time frames. But on the daily chart, this could very easily resolve to be a bull flag. Like something like that's not an unreasonable, that's not an unreasonable at all. Yet it could also droop down to here before that happens, and only, something like that. So like there's very little edge yet, I will say, because now what we've done here is, you can see on this daily chart, is we've started to consolidate in this zone for the last 4 days. So let's zoom into lower time frames and see what that means. There you go. So you see that's that box that we just drew. This is the hourly chart of that box. And you can see, yeah, so in real time, we're just holding above a swing low here on the hourly chart, which means we probably have a swing low on the 4-hour. Nope, not yet. So it needs to get above 2.492 to print a 4-hour swing low. And obviously, once it prints a 4-hour swing low, we have the potential to print an 8-hour swing low. So the 8-hour candle closes in 40 minutes, actually. So that's important. The high of this 8-hour candle is actually 2.492, same high as a 4-hour candle. So once this candle closes in 40 minutes and we get the open for, which is going to be the equivalent of the Thursday candle, what you're looking for on the 8-hour candle is something like that. That tells you we may get a reversal on the 1 hour, on the daily chart. And you can see this 8-hour pattern looks very similar to the 1-hour chart, which is not surprising because there's obviously, basically 3 8-hour candles in one of these candles, more or less. And so that's what you're looking for. And obviously that would show up on the 4-hour chart first, because this 4-hour candle is going to close at the same time as that 8-hour candle. So if you're looking really at the micro, that's your signal. But like big picture, you want to hold this level here. You see this is forming, this right here is basically a false breakdown of these levels here. So you want to stay above that. It's not awesome that it's already given back 75% of the rally, because we went up about a dollar, and here we are. Actually, wait a second. That's interesting. Yeah, right. It's BOIL that's given up about 75% of its gains, right? Of course, because that gets pummeled on the downside more so than natural gas itself. So that's the lay of the land there for natural gas. Let's move over to BOIL and UNG, and we will also look at LNG, which is let's look at LNG first. It's a natural gas producer, and you can see we talked about this in the last video. We'll start keeping track of this. Pretty clear daily cycle action here to some degree. You had this cycle here that lasted 32 days and was actually like, there wasn't too much downside. I mean, really more so sideways action, but it was very left translated because it topped on day 7. And then we got this gap up, some positive earnings. And then what happened? We topped out on day 8. That's not like, isn't that interesting? A little 8-day rally that after this little 7-day rally. This was a 13-day rally, but like in terms of like actual progress, not much more progress than this one, and actually less progress than this one. So not great signs. And if you zoom out to a weekly chart and the monthly chart, you can see this thing might be undergoing a longer term cycle decline. It seems like it basically peaked later than natural gas, because natural gas peaked last year, and this thing is peaking. So this thing would have peaked here November 22nd, and I think natural gas peaked in like October. And so if we look at the weekly chart, we can suggest that we are in weekly cycle decline after a top on week 8. The previous high came on week, let's see, just to kind of give us a sense of the progression. So that was week 20. So that tells you this is your first left translated weekly cycle. So that's really interesting, because this means this is just the second week of the weekly cycle decline. You can see this weekly cycle decline lasted a good number of weeks. And so the expectation here would be something like, so this is actually a nice little short, as we talked about in the previous video, something like that, a bounce at some point, and then to complete the weekly cycle. And who knows how low we go? That's not a prediction by any means, but that's kind of the pattern we might expect. And what is the monthly picture look like? So again, this is where we talked about this thing has rallied for 32 months. That's almost 3 years of just nice, clean, smooth uptrend, just making money. Now, obviously, you have a red month here, not great. It actually closed as a swing high, so that was scary. But it resolved to much, much higher highs, all the way up to 182. We're down here at 143 is where we closed. And most importantly, look what it's done. So we're not quite there. Wait, are we there? So a low of 142. This is a low of 141. Yeah, so we got there. So LNG has completed a bearish outside candle. So again, and obviously we still have, half of a month to trade. Again, it's important to know what the monthly candle is doing. And so this is that. So you're at the point where you could easily see a little bit of a bounce because we've taken out all these stops, let's say, for instance. But at the same time, that gives you an opportunity to sort of reload. Because think about it as this long trend, and then you have this, potential for something like that. Because after a 32 months of rally, it's not unreasonable to expect maybe we get a longer move down. Yet at the same time, again, natural gas has been falling for longer, so it's going to be a good question to see if that thing bottoms. So it's reasonable to think that natural gas will bottom ahead of LNG and other similar names. Let's look at UNG now. So we look at that monthly chart, and again we talk about this bearish outside monthly candle. Again, just that was the last one that happened in June. Very clear, made a higher high, went on to make a significantly lower low. Doesn't mean this thing has to make a significant lower low than this. You can see LNG, I mean, we'll see, we still have a lot of months to go. That's not a significant lower low just yet, but this is dangerous when you see that. And if we look at the weekly chart, we're also teetering on the edge of a new low on the weekly chart. So notice we made a lower low last week on the weekly chart. So we closed below the low of the previous week. And with 2 trading days left, we have to stay above $8.02. And we're here at $8.16. So that gives you very clear levels. If we look at the 2-week chart, it's the same level because it's the same, because last week was the close of the 2-week candle. And so this 2-week candle actually has this week to close, doesn't close until next week. So it's going to be really interesting to see, again, how this thing develops. Gives you basically the picture of what the end of March may look like. Again, are we going to make this lower low the way this thing seems to be screaming that we are? So that's the 2-week candle. And then finally, the daily. Again, totally possible that we get rescued here. And again, these things get pummeled more so than natural gas. So this thing rallied $2.84, and we've declined about $2 already. So pretty good percentage of that. And so we'll see, can it hold here? It obviously has to, because the deeper we go, the more likely this is our daily cycle high, And we talked about why that's so bearish. And again, just more specifically, yesterday was an inside candle. We talked about that. I posted that on Twitter. Definitely take a look at the pinned comment if you're not following on Twitter. Today we opened as a gap down, and we were never able to go anywhere close really to the bottom level of the gap. So tomorrow we're gonna, guess what? Think about that. We're basically gonna either open as an inside candle, which is what we thought was going to happen today, but it didn't. We ended up actually gapping down. So think about it as like your most optimistic picture is that you open as an inside candle and then you work your way up the levels on lower time frames and then you make a higher high, right? That's the optimistic view. And obviously we could gap down again. And of course, there's always the possibility that you get this kind of like beautiful gap up out of this pattern. Who knows? We'll see. That's not what I would be betting on, obviously, but it makes it so that it's pretty clear, like it's pretty clear what the optimistic versus more likely scenarios are, which is, again, either opening inside this range here or maybe below the range somewhere. Outside chance maybe that you get some kind of gap up back into the zone. Who knows? Maybe there's some kind of news event. And for BOIL, obviously, we're looking at the same kind of situation here. I think in this case, it's given back even more of the rally. So that was 70% of the rally given back for UNG. And in this case, we rallied 364 and we've given back 319. Wow, that's quite a give back. Yeah, so that's about 87% of the way down. I mean, it could stop here. It doesn't have to go back to 100, but that seems kind of unlikely. There are gaps above at some point. Maybe they get filled, but again, always and actually, here's another gap right there. So at some point, you get a little gap fill from you maybe put yourself in a position for a gap fill like there. But at this point, you kind of need that to happen to rescue this daily cycle, I guess is what I would say, which is a good way to think about it. So if this thing could break above 635, that tells you we could be on, like, that's kind of like your wake up line. That tells you we can get back to that $8 level. That's what you kind of want to see. And we're down here at 512. So that's actually a lot of upside, even just getting up there. And I think that's right. Just looking at the weekly, that level we have to stay above is $5.08. So that's important. And that's going to be the same level on the 2-week chart, just like UNG. So pretty clear levels here. The market itself overall is kind of tricky. The Qs seem to be holding up better than the S&P itself. And so we're going to see how things shake out, especially with the Fed meeting next week. Could be that we get actually just a bit more consolidation. So maybe leaning lower, but not like a cascade lower. So we're going to watch for that. That's the update on natural gas. Thanks for watching.